as earlier scheduled in the last class, would be taking the class along where Mr. Gabriel stopped. We'll continue alongside with it, and then that way we'll be taking our classes gradually until we proceed to the end of the chapter. I'm sure Mr. Yusuf earlier mentioned we would have a revision class afterwards. So in the last class yesterday, how many of us joined the last class? Let's try to how many of us, if you joined the class, kindly use the thumbs up emoji. All right, Adebayo, thank you. If you didn't join, you can use the thumbs down emoji. All right, I can cite all of you that joined the class yesterday. All right, I'm sure. Okay. Oh, Deborah, why didn't you join? You're using the thumbs down emoji. All right, all good, all good, all good. So because we might have people like Deborah who didn't join, we will just do a flip through of what Mr. Gabriel did yesterday before we now um, take an emphasis at where he stopped. That will be where we would stay long. Hope that's fine. We are fine with that, I'm sure. Good. So chapter 2 of our study pack is speaking about professional ethics and code of conduct. Professional ethics and code of conduct. Apparently, in almost all your diets, all the exams in the institute, you always see exams on professional ethics and code of conduct, because this is one of the most important aspects of the paper itself. We cannot say you are a chartered accountant, not even an auditor, if you are not aware of your ethical principles, the professional ethics and the code of conduct that you are to follow. That's why this particular topic is very important. And it is, we used to call it easy marks. You should be able to grab the marks. If you should forget everything, you should not forget professional ethics when you're inside the exam hall. So when you go inside the exam hall and then you see exams question on professional ethics, you should be happy about it and you should be able to answer it correctly. All right. So this topic talks about what are the do's and the don'ts. That's the ethics. What are the code of conducts? What actions are required of chartered accountants and auditors, as the case may be? So we would say Mr. Gabriel must have mentioned in the last class that ICANN has its own code of conduct, code of ethics that is getting from IFAC. Since ICANN is a member of IFAC, the International Federation of Accountants, we have the professional code of conduct that is set for all accountants the world all over. And ICANN, being a member of IFAC, has adopted that as well. Why do we have to be following this? Is because of the public interest. I'm sure we spoke about this. I think myself did that. So Mr. Gabriel spoke extensively on that. Then Mr. Gabriel must have also mentioned about the two kinds of ethics: rule-based and principle-based. Rule-based is where we are looking like it's a law. If you do not follow it, that means you have broken the law. But principle-based is where we would say that you have a leverage to use your judgmental, your knowledge, your judgment to make the decisions. But it has to follow the principle, as the case may be. I'm sure Mr. Gabriel must have given clear insight about it. Okay, we would always say that there are 5 fundamental ethical practices, or 5 ethical principles that chartered accountants must always follow. And I don't know if Mr. Gabriel used this acronym, but there's an acronym I learned from Marison in ACCA classes. It was PICO, PICCO. For you to remember the fundamental principles, PICO, PICCO. If you can hear me, please confirm we were using a thumbs up. Are you there? All right, Deborah, thank you. Hamid, okay, thank you. Sharon, thank you. Adam. So we have the PICCO, Ruby. I can cite all of you. P standing for professional behavior. I, integrity. C, competence. Second C, confidentiality. And then the O, objectivity. So anytime you hear about 5 fundamental principles, IFAC 5 fundamental principles for chartered accountants, you just remember PICO, professional behavior, integrity, competence, confidentiality, and objectivity. PICCO. So in the course of teaching audit, in the course of taking this audit class, would have some acronyms that would always help you remember terms. So PICO is one of such that you would use to remember the professional ethical principles. I'm sure as well that I'm just doing a revision because Mr. Gabriel did this. Integrity, you are straightforward, you are not telling lies. Objectivity, you are not biased. Competence, you are intelligent. Confidentiality, you know too good to talk. I hope please, I would have to be just like somebody is saying that whoever is handling the ICANN handle is a Gen Z, but at the same time it makes ICANN more close to the people now. I'm sure we can. How many of us are seeing all the posts by our new social media handler online? If you are doing that, use the thumbs up. Okay, yeah, Ruby. So to thank you, Sharon, thank you, and the rest of it, Juliet Peters. It makes ICANN very interesting, especially when he spoke about the 7 doors, and in fact, all of them, the person is just up and doing. So I in my classes, just to make the class lively, I would be using sometimes, rarely, Pigeon and the rest of it. So explaining this professional ethics, integrity, where you not tell lies, you have to be straightforward. Your way have to be, it shouldn't be crooked. Objectivity, you don't also have to be biased. You should not be under any influence at all. Should be free from all forms of bias. And then competence, you got to be intelligent. You cannot say you are an accountant and then you are not intelligent. You gotta get number 6. Then confidentiality. You don't have to be talking anyhow. One principle about accountants is that they don't speak anyhow. You would always have instances where people would say accountants. Those ones are always very quiet. And I don't know if you are not a quiet accountant, that means you're an accountant that will soon enter trouble, because the more you talk, the more tendency for you to enter trouble, and the more tendency for you to say the things that you're not supposed to say. So an accountant must be confidential. Right, professional behavior. This one is character. You have to act professionally at all times. Then we have the threats that affect independence. We have the SS. The acronym here is already shown here. SAIF: self-interest, self-review, advocacy, intimidation, and familiarity. These explanations were given earlier by Mr. Gabriel. I wouldn't want to spend so much time here, but just for the purpose of people that didn't join the class yesterday, self-interest is when you have your own desire different from what is for the organization or for your firm. So when you have your desire, you will always aim at satisfying your desire first, and it would make you to be biased. So it is a trait that affects objectivity. Self-review: when you are the person that did a job or a tax, and then you are the one coming to sit down and then look at the tax that you did. In this case, for some of us, we've experienced that you are writing a sentence, you are reading it with "this is good," but meanwhile you have not actually written "is." You are reading "this is good," but is not there. Things like that happen. Please, if you're following me, if at any point you can't hear me again, please use the thumbs down emoji, and then I would check my connectivity. But if you can hear me, I would from time to time ask so that we proceed. All right, thank you, Payemi. Right. So advocacy trait is when you are going to be an intermediary. Probably you are speaking in support of your client. Mr. Gabriel spoke extensively at this. I'm still doing a review to walk past it. And then we have intimidation threat. When the management is telling you that this job or this client, this audit that you're doing, you might not continue doing it next year. Things like this happen. All of this, if I give instances in my own practice, we might spend so much time on it. But since it was already done, we have to move forward. Familiarity is when you are you're rubbing shoulders with your client. In this case, you have that risk of being biased as well. You will not be objective. If you are going to audit a firm where or a company where the accountant in that company was your classmate in school, and you people are still talking, you are pals, you people are aligned closely with each other. Even if the guy they steal money, you know you talk say your guy in a thief now. You have to keep quiet. So there is familiarity, and that will make you not to be objective. Right. So there are safeguards to those threats, which I know that Mr. Gabriel, my professional colleague, very learned professional member, must have spent time to look at this. So he told me that I will speak about the concept of independence. So I would emphasize. I'll start the session by speaking about the concept of independence today. However, just to mention, there are safeguards that will be placed by the profession, that is ICANN itself, safeguard by work environment, and then the safeguard by individuals. You yourself, you got to protect yourself before you enter trouble. So just like we've said, there are threats, familiarity. There are some instances where some tax or some audit or engagement comes, and then you just, to help yourself, you say, I don't want this one. That's the safeguard you might put for yourself. No be all the job where you could go get them. Job with too big face, you need to leave them. And we have also safeguard put in place by the work environment. These are internal controls specifically. Right. I should proceed to where we have to emphasize. So we've already spent like 10 minutes speaking about the previous class. Please, so if you can still hear me and then you are okay with us to proceed, use the thumbs up and then we start with the independence. Thank you, Sharon. Thank you, Adam. Thank you, Deborah. Thank you, Juliet Peters. Thank you. All right. So the concept of independence. So when we say independence, we are simply saying that the auditor is carrying out the tax without external influence. That is, the auditor is carrying out his work without depending on anyone externally. Now, most of the audit terms, with your IQ, with the intelligence quotient, you can relate them. Independence means I am not depending. So what is the concept of independence? That means that act of not depending. So when we say an auditor is independent, that means he is doing his job without any act or any iota of dependence. We have two levels of independence when it relates to the auditor. We have independence in the mind and independence in appearance. So you will have, I will use this analogy to explain this independence in the mind and independence in appearance. Someone can be seen to be independent and someone can claim to be independent, but it is not seen to be independent. So it's just like inside the exams hall, you are writing your exams without turning your neck left or right, or without using any your phone or any device. That is in appearance. The person that is looking at you is saying you yourself and your book, but in your mind, only you might tell what you are doing. So now let's relate it to the concept of an audit. The state of your mind will permit the auditor to say that he's expressing an opinion without any influence. So when the auditor is having a status in his mind that he operates with a high degree of integrity. He is objective, and then he's exercising professional skepticism in his mind. He's not allowing anything come into his mind that might make him not to be independent. That is when we say you are independent in the mind. So you can be rubbing shoulders, you can be playing along with people. In appearance, people might think that you are not independent, but that inbuilt state of your mind, you know that no matter what is happening, even though I'm playing, I'm laughing, I'm running around, I'm rubbing shoulders, there is no influence that will change. Just like people will say, whatever is happening, what is in my mind is what I'll do. That's the meaning of actual independence. So actual independence is what is in your mind. How are you actually doing things? And then the other concept of independence is independence in appearance, which is perceived. What are the people saying about you? Do outsiders see you as being independent? Just like someone, the concept of holiness. Some people can be holy in appearance. You just see them being so pious. They don't smoke, they don't drink, and then if they are to, if people should talk about their reputation, they say, oh, that person, I am seeing him, he doesn't smoke, he doesn't drink, he doesn't do this, he doesn't do that. That is in appearance. People are perceived to be independent. Auditors as well needs to be perceived to be independent. That's why most auditors, when they come to their premises, to your client, to client premises, they don't tend to play, laugh, and then drink, go to clubs, meetings, and dine and wine with the clients, so that in appearance, the shareholders and the people who brought them will not see them as not being independent. So another concept, another analogy that can be used to explain this, and then it will stick, is if a man and a woman goes into a room, or probably we just see a man and a woman coming out of a room in the morning, of the next day. In appearance, some people might perceive that a lot must have trespassed inside the room. But in the mind of those two persons coming out, they know exactly what happened. So this is the concept of actual independence and independence in appearance. Please, if you followed me, use thumbs up, and then I proceed. All right, Deborah. Opeyemi. Thank you, thank you, thank you. So oftentimes the auditor has to have the two levels of independence, both independence in the mind, which is the actual independence. That is, let your mind tell you the truth that I am not going to be influenced. I'm not going to compromise. And then also in appearance, let it be that you don't make people start suspecting that you are not going to be independent. So you need to strike a balance between these two levels of independence. Don't do one without doing the other. You have to take them in equal proportion. Circumstances of threats. What are the threats that can affect your being independent? I want to ask a question. Is there anybody here that does not like money? Who do not like money?
I can hear you.
Use the thumbs down. Who is talking? Please, can we all mute ourselves? Use thumbs down. I love using the reactions so that the emojis shows we are all together. So if you don't like money, use thumbs down. If you like money, use thumbs up. Okay, okay, okay. Olamide, Sharon. I'm yet to see somebody that does. Oh, somebody is even using love emoji. All right. These are the people that love money so much. I hope you will not, your love for money will not affect your. Oh, Adam does not like money. Oh, wow, this is interesting. Adam, Sharon, this is true. Oh. That means we have people that will not compromise their independence. All right, all right. Interesting. So now there are things that might affect independence. In audit, we have two major concepts: independence and objectivity, and we have threats that affect these. So some of the threats that affect one being independence, fees and pricing. Money is very, very important. In fact, sometimes people would say that money controls almost everything. Yes, money is very necessary. A friend would always tell me, if you forget everything, don't forget to make money. So, because of the power and the influence that money itself carries, money, that is fees and pricing, can affect the auditor's independence, both in appearance and in the mind. Family and personal relationships. If I have a very close tie relationship with uh Mr. Peter, I will always protect that relationship and will not want anything to come in between it. So all of these relationships as a whole, both close business relationship, family relationship, personal relationship, they all have a threat to independence. It might make me the pain. It might make me stop being independent. I might have to consult him before I pass an opinion on the financial statement. I might have to consult him, or I might come to disclose confidential information to him. Loans and guarantees. So if I'm indebted to my client, if I've also guaranteed a loan to my client, one of the problems people used to have, probably you guarantee a loan to someone and then the person fails to perform the responsibilities over there. You as the guarantor would have to be held responsible. You now do the payment. So might no go talk say this guy don't steal money, or before he will now go against the loan policies. I am acting as a guarantor. Then I will now be the one paying the loan money where I don't even chop. So those things might make you fail in being independent, right? We have others. Let's just take explanations as summarized in this note. So financial interest could be a form of having shares in a company, and you know that if you form an opinion and report that this or that is happening to this company, it might affect the whole existence of the company, and then it poses a threat to you. So you have a self-interest over the company, and then it might affect your independence and objectivity at the same time. Close business relationship. So in a case where a team member of an audit has probably a joint venture, it might pose a threat, a self-interest threat. For instance, if you have a business relationship with your client, you are supplying paper in your client's business, you will have to keep quiet whenever things are not going on well in your client's business, so that your paper supplies will continue running. So purchasing goods and services from your client, or doing any kind of supplies or somewhat, can affect your being objective, and it can also affect your independence. We've had instances. Now, let me pause this at this point and mention that exams question will not come to tell you, mention this and explain. No, no, no. Exams question will always be scenario based. Will tell you you should be able to spot the threats. We'll give you a storyline. Probably the manager is the audit manager going to a client. Maybe, for instance, you are the audit manager in a firm of who is there? Olamide Deborah and Co. Chartered Accountants, and then we are in the one of your clients called Peterson's Pharmacy. Peterson Pharmacy is owned by Mr. Peter, and Mr. Peter's daughter is probably the fiance to the audit manager. They are just trying to call questions that would depict family or personal relationship, that would depict self-interest. So you are now to read the storylines and then spot which of these threats exist in these stories. So when you read through those storylines, you now be able to spot, oh, this threat exists, that threat exists. Or for instance, they will now say the audit manager is supplying Peterson diesel to run the pharmacy. So things like that. So you will now be able to spot, oh, there is a close business relationship going on, and this threat is a self-interest threat. It's going to affect independence. It's going to affect this. It's going to affect that. Right. Let's proceed. So we can have instances where a saving officer in a client is a former audit staff. In most cases, members of audit firms, staff of audit firms will leave the audit firm to become employees in some client companies. Probably they start by going there on secondment, and then later they are absorbed. Myself, I'm an example. Although immediately I was absorbed, my audit firm stopped auditing where I'm working. I went there to on secondment, and afterwards, later on, I was adopted by the company I was. So, if for instance, by any means, the audit firm that I was working for previously comes to audit where I'm working currently now, you would have instances where there are familiarity threats because I still have friends that are there coming to meet me, and then they wouldn't want to say that, oh, their staff is doing things wrong, even if they will spot some mistakes in what I'm doing. They cannot report that I'm doing things wrong. So they would always love to cover up those things. So in that instance, there are familiarity threats and the rest of it. So those are instances here. Long association with partners. Normally, audit firms have to rotate within a 7 years period. So you don't have to stay too long on an engagement. After a while, you have to leave the engagement for another audit firm. So you will rotate senior staff in an audit engagement. So for instance, if I am the senior on an engagement to audit MTN, for instance, I don't have to stay on that engagement for more than the cool off period. For a period of time after maybe say 7 years or 5 years, I have to take a cool off period and then come back. By then, the team members at MTN, for instance, must have been rotated. Then we also have instances where we have to carry out a quality review to help ourselves if we have to continue using the same team members. Please comment with a thumbs up if we should proceed. If I'm too fast, you can use the thumbs down. All right, thank you. Thank you. Oh, I'm too fast. I think I got too fast emoji twice. I would love to see that again so that maybe I'll have to go back and then take some items line by line. Is there anyone that let me see any thumbs down? I would love to hear your, or was it a mistake? I would love to hear from you. Is it thumbs down? Let me, if you did a thumbs down, do it again so that I can spot you, and then you would have to tell me where I was too fast, and then I can go back and then make further explanation. Still expecting. Okay, then it was okay. Sheon is saying it's a bit faster. Is it I should be faster or I am already faster? Which of them so that I know? All right, you can use the chat box. I'm active at the chat box as well so that we follow through. All right, let's proceed. Audit fees. Where fees are derived from? Okay, we should slow down. Thank you very much. Thank you very much. I would take it little by little. I'll take it little by little. Thank you. Okay. Okay, the pace is okay, Ajayi. All right, let's speak about the audit fees. Now there is I started with speaking about who doesn't love money or who likes more, the rest of it. Fees is very important because that is why we even got the engagement. So where fees derive from a particular client, I'll try and strike a balance. Don't worry, we'll all be fine. It will make everyone a happy person. I'll strike a balance, not too fast, not too slow. Where fees are derived from a particular client company is a large portion of the firm's total income. It will pose a threat. Now, let me say this. If, for instance, an audit firm have 50 clients, if an audit firm has up to 50 clients, and then one of those clients pays them
Okay, sir.
more
Wait.
than 50% of their income,
Wait.
there's every tendency that that audit firm will not want to lose the client that can generate more than
After
50%
we eat
of their income. In
it.
this
Like
case,
this
there is
time.
a
Because
significant
I eat my
self-interest
test for your
threat.
party.
In this case, there is a significant self-interest threat because the audit firm will not want to do anything that will get those guys angry. If those guys get angry, that means they've lost the greater portion of their income. So for the public interest and for the interest of the client, the principle is that one client fee should not exceed 15% of your total income. So some of us here, I'm sure all these are all interrelated. If you are doing CSMA alongside with this, that was initially management governance and ethics. We must have learned about Porter's 5 force model and learned about some other business models. So when we have an instance that we are over depending on a supplier, the supplier tends to become having so much power over us. The same case applies that when an audit firm over depends on a particular client, that client tends to become the one controlling the audit firm. So the client, anything the client wants, the audit firm will want to ensure they do it so that they don't lose the client. That's the emphasis that we're saying here, that one client shouldn't pay you more than 15% of your total income. If they do, there is a risk that you are going to lose your objectivity or your independence. So if it exceeds your 15% of your total income, then a pre-issuance review should be conducted by an external professional accountant or the regulatory body. What's the meaning of a pre-issuance review? A pre-issuance review is a review that the audit work performed by a party, not among the engagement team, before the audit report is issued. So before we give out, if we should accept a client that pays us more than 15% of our annual income in an audit firm, then before we issue out our audit report, there should be a pre-issuance of the audit report's review. Somebody should be able to review the audit report we are about to give out before we give it out. And then there should also be a post-issuance review. After the review is done, before we give out the audit report, we should also do a review after the audit report is issued. Then there is another instance here that it's worth explaining what gives rights to the threat to independence and objectivity. It's called gifts and hospitality. I had a friend when we were working in the audit firm that left the audit firm to join one of the airlines. And then after 1 month, I was still in the audit firm. The lady called me on a very serious Monday morning. Very funny. I was thinking it's a serious issue. She called me and was telling me, "Hello, Mr. Ubong, I'm missing something. I'm missing the food in the audit. I'm missing the audit firm. What are you missing? What do you miss so much? Is it the food? The food the client will give us. The hospitality, the treatment. When you enter the client's premises, you will be treated like a king. You don't even you eat from home before leaving, and then when you get there, they'll still ask you tea or coffee, things like that. Are you with me? Let me confirm we are all together. Please use the thumbs up if you're still with me. All right, thank you, Adams. Thank you. So hospitality is It's like what clients uses to, they will just be spoiling the auditors. There is an instance where they would give you so much that you can jeopardize your actions. So excessive of this pose a threat. So before you accept so much of the gift, so much of the hospitality, you need to ask three questions. Is it material? Is somebody offering to give you a gift that is significantly material? If it is material, it is a threat to objectivity. Is it given to me during the normal working hours? We have instances where auditors, all the young chartered accountants or probably interns you take interns for audit work. The client will offer you, let's go for a dinner this evening, and at the dinner they just place a demand for one Dorime drink for you. And then you'll be like, what is this me? You would just get spoiled the next morning when you get to the office. You are already biased in all your decisions. So is it during working hours, normal working hours? So you're trying to check for quality control. And then do the individual check first before receiving it, or consult the senior partner? You are a junior on the audit engagement. Is it everything that is given to you that you just jump on and receive? So these are questions you ask. If it is extremely material, you might need to, the big four firm will always say you have to disclose. You make the senior partner, the senior on the engagement, your audit manager, to see that, oh, this is what the client is giving me. You have to go and make full disclosure just to ensure. And then in fact, in some cases, one of the big four audits where I'm working currently, when you give them some gifts, they will tell you, I'm going to let my principal partner or the audit manager and the partner on the engagement aware that this is the gift you have given me. So by that, you the clients giving the gift, you're already aware that, this thing where I did give these guys, then they could tell their guys, say, I don't give them this. So there is no how they will compromise. So it's a principle and it is a policy that you first of all check, is it material? In some companies, not just for audit, there are companies that says you shouldn't collect gifts from vendors or suppliers that is worth more than a certain amount of money. For my organization, you shouldn't collect gifts worth more than $50 in the organization. So or $10, yeah, $10 in the organization. So if somebody is giving you gifts worth more than $10, you have to disclose it. It's either you reject it completely or you disclose it to your supervisor at the job. So is it during working hours to check for quality control, and then do you disclose it or report to your senior on engagement? That's the discipline matter. Right. Then actual and threatened litigation. These are instances where we say that is intimidation. There are instances where you can the auditor goes to an audit premises, and then the manager or the shareholder is are threatening you that they will take up a litigation case against you if you don't do what they want you to do. So a typical example is probably someone is hiring you is engaging the services of an auditor to say, this guy has stolen my money. And then you've gone to check the books. You might have you may have not seen any proof of such. And then he's threatening you that he's going to take up a case against you, or probably taking up a case, giving you threats that you form an opinion, and then a case will be taken against you, your firm will be sued, and then later on, the effect of you going to court, it might soil your own image and the rest of it. So the best safeguard approach when you start experiencing intimidations, threats to litigation, is either you resign from such assignments and then give disclaimer in most cases. Other cases of intimidation might be when someone might give you, we have instances where some auditors are threats, given life threats. say we are going to kill you or we are going to do this or that to your family members. Provision of non-audit related services. These are all explanations of some of those basic threats. In the last class, someone was asking about assurance services and audit related services, non-audit related services. So where an audit firm is providing to the client non-audit services, like for instance, you are preparing cash flows, you are doing things that are non-audit related. It used to pose potential threats. For instance, it might post the threat of advocacy. You are standing to talk to protect your client's image. You are doing tax services for your clients. For instance, you will be saying, my client should pay a lesser tax. You are advocating for your client. In most cases, you will not be objective because you will definitely take side. You will be taking the side of your client because your client is requiring that is why your client engaged you. So your work will definitely be to protect his own interest. So in that case, you will not be objective, and then that is an advocacy threat as well. So such services, if you have to do it, it should be done by a larger firm, probably a firm that have different departments. Good examples would be the Big Four, where we would always have probably the actuarial valuation services separately from the people that are doing the audit. Or we could also have instances where we have people. You are Joseph. Are you saying you cannot see my screen, or what is that? Let me check the chat box exactly to get what you're saying. All right. The pace is okay, but I cannot. You cannot see my screen, or you cannot share my screen. Okay, I should make it bolder. All right, I will do that. Thank you for that. Okay, so that is for provision of non-audit related services. The guidance here is that for you to, what safeguard measure should you take for provision of non-audit related service? I've mentioned that the services may be provided if the audit firm is large. There could be instances where you can, this an instance where we say you create a Chinese wall. The team members that are doing those services can be different from the team members that do the audit service. You get. All right. Another threat would be temporary staff assignment, where I made mention of self-review, secondment, sending a staff to go on secondment. So if, for instance, you are sending a staff in the audit firm, this happens so frequently. So we might have an instance where you go for an audit, and then you notice that the accounting system in that audit in your client premises is not so good. So you can pick up the best hand in your firm, in your audit firm, to go there and work for them. But in that case, there are threats. Self-review threats exist. Familiarity threats exist. I think I mentioned that earlier. And then threats to management also is involved. So in most cases, why do we have self-review? We will have self-review because it's your team. You are going to review the work that is done by your team member, now in employ or in secondment for your clients. So there will definitely be a self-review. You will not be able to spot mistakes made by your team member. So for instance, a good example is, for some of us that are working, we have in our teams, we know some people that are good in probably, oh, that guy is good in Excel. He's good in Power BI. He's good in QuickBooks. He's good in Search. We just believe that most of those guys in our team that we say they are good in this, there is this perceived assumption that they cannot make a mistake. They're so good in that area that they can't make a mistake. So if, for instance, you have sent that good guy to go for a client to go to on a secondment in a client's premises, and then you are still going there to carry out the audit, you will definitely have that perceived nature that the guy is too good. You will not even take time to do the review. So there are self-review threats, familiarity threats as well. The team members are his pals. They've been playing around and working. It's very rare in HR. It's very rare for team members to be together, see each other together, and then they will not be familiar, and then play, and then do things together. So most times there will definitely be familiarity threat. So the following could be misunderstood. Such members should not be involved in making management decisions. Yes, even if they should go for secondments, they shouldn't be involved in making management decisions because they can if they are involved in making management decisions, the threat is higher in the sense that they are going to take actions, and the audit firm, the firm that is coming to do the audit, any decision made by them would be seen as like this is related to threat to management involvement. It will be seen as, is it not your team member that is the person that made this decision? If let me use an example. For instance, if my firm sent who is there for me to use it, sent Deborah to go on secondment to Golden Penny, and then Deborah and Golden Penny made a management decision that sales should not be made to the southern states. It should be made to only the should we should, or for instance, maybe Deborah went there to say we should stop importation, or we should stop yes, we should stop importation, and then the decision made by Deborah has affected the company in a wrong approach. We wouldn't come to accept that our staff made the wrong decision. We would always want to protect the image of the staff that we send there for secondment, just to protect our ego. I hope we are getting that. So he shouldn't have management authority. Then the area must not the area must be connected with accounting and finance, because we are the ones sending the person, and so whoever we are sending on secondment shouldn't go to do management related tax, but should be accounting related tax, because perceived members of audit firms have a finance and accounting know-how. However, the appropriate safeguard here is to relieve such staff from working as a member of the audit team. Most times, if a staff is sent on secondment to stay for over a period of time, it's either the staff would decide on where he would be working, it's either he would continue on the secondment and not join the team again to do a review on the job he did. So, for instance, if I went on secondment for 3 months or 5 months in a particular client's premise, I don't need to join the team that will want to go to do the audit of that particular client in the next year. I shouldn't join that audit team, or probably I am completely off the engagement completely. Second opinion, this is a situation where a company approaches another professional firm to do a review on what they've done and form an independent second opinion on what they have done initially. Later on in audit, we'll see cases of what is called the hot review and cold review. That is where we would really relate that mostly. Problems associated with carrying out second opinion is that since they are not the firm's clients, perhaps they don't hold all the relevant information, they might form a wrong opinion. So it's just like calling a third party, another person, another audit firm to come and review, form another opinion on the opinion you've already formed. There's likelihood that they may have not had relevant information, so they might form a wrong opinion. And then such company might use your opinion to pressurize its current auditors to change to theirs. Intimidation threats might also exist. So these things are like competition invariably. So the company might now you might lose your client if you are bringing another person. So you just create, that is the problem associated with are calling for a second opinion. Okay, what can the auditor do in the case of asking for second opinion? What can you do to help yourself navigate the problems that are associated with second opinion? Where a company have asked for a second opinion, as the auditor, you can ask them to allow you talk to their auditor to get the full facts and also to protect the auditor from being intimidated. This one helps solve the first problem of not having relevant information that can make you form a wrong opinion. And then if they're gonna give an opinion at all, issue a disclaimer. What does this imply? If, for instance, we've earlier mentioned that the first instance is solving the first problem. If you are noticing that there are intimidation threats against yourself as the audit firm, you just form a disclaimer. What does the disclaimer of opinion means? Is just a status that says that based on the information provided to you, or for some other reasons that you might want to state, you cannot form an opinion on the financial statements. Specialist valuation. These are other services that like I mentioned earlier, actuarial valuation. These are valuation aside from the valuation of shares prior to the stock exchange listing. So we have actuarial valuation where we are related to ways or fully related to valuing gratuities, staff retirement benefits, valuation of assets and properties, valuation of intellectual properties and other intangibles. Audit firms are always not permitted to carry out these services because it will always lead to a self-review threat. I've had instances where in my current audit work, we had we constructed a building over time. It took a very long period of time. So the building was always sitting in the account as a building under construction. So afterwards, when we finally completed the building process, we had to bring it into the account. Our external auditors were like, no, we cannot accept this value, the value of this building, as all the cost of your IAS 16, yes, would have been the cost of erecting the building. But since it has been over time and being that they have seen the way the building is currently, they were of the opinion that we should engage an independent valuer to come and value the building. And then whatever the independent valuer says is the value of the building, that will be what we will recognize in the account. So we were asking them, why not use your own valuer? Since it is a big audit firm, this particular, to guard against this threat, the self-review threat, they insisted on us going to use an independent valuer. So valuation of assets, currently also our staff retirement benefits gratuity plan is completely by an independent firm that does actuarial valuation against not using the actuarial valuation team of the audit firm. So audit firms are always are always warned against using or engaging in performing specialist valuation services as stated above: the actuarial valuation, valuation of properties, valuation of property, intellectual property, assets, intangibles, and unquoted investments. This is to help them safeguard against self-review threats. I mean, self-review, you are the one doing the tax, and then you're coming to review the tax. So oftentimes, if the independent valuer, for instance, in the building, I'm giving an instance, the independent valuer gave a valuation for the building as requested by the external auditor. They now took the report of that independent valuer and then carry out a review using their own firm, the firm's valuers, to review the work that was done by our own employed independent valuer before they accepted to use the figures provided in the account. So if at all they were using their own valuer, they wouldn't have carried out any review. So in that case, they would have been a self-review threat. Okay, why should audit firms not engage in these services? Because it could lead to self-review threat, which can not be reduced to any acceptable level of any by any safeguard, most especially when it involves matters material to the financial statement. Like we said, the valuation of a whole building, that was almost taking, the whole building was about to take up to 30% of our assets in the financial statement. So it's a material item. So they would not want to get engaged in doing that. There is a degree of subjective and or judgment. You might is there's a kind of dilemma situation where people would now have to use their own judgment. Because people might have to use their own judgment, it's not necessary that the audit firm who is carrying out the audit should be the ones carrying out this tax. Okay, in most cases where the client might want you and insist that you should do the tax, the audit firm should either resign from the engagement or you shouldn't provide the valuation at all. Here, another core principle: confidentiality and conflict of interest. Confidentiality implies not disclosing informations that are meant to be kept secret. As simple as the term is, confidential should not be disclosed. So it states that information obtained in the course of carrying out audits, engagement, or professional assignments should not be disclosed to others for personal purpose. So if you go to a client premises and then you see that, oh, for instance, Seplat is paying their staff up to this amount of money or that amount of money, you don't need to come outside and be talking anyhow. Remember, I said something that when we were dealing on the 5 professional ethics, when we provided a little explanation, we said accountants don't speak anyhow. They are always very careful in what they are saying. Please let me confirm we are still together. Use the thumbs up just to confirm we are still together, and then we are following what we are doing. Deborah, Shena, Debayo, okay. Thank you, thank you, thank you. I can support all of you. We have up to 30 members on the call. I hope some people have not slept off me. All right, Mr. Peter. Okay. Fortune. I still want to see others thumbs up. Father K. Let me see you, Miriam, Adam. All right. Just to ensure that we are all together. All right. Thank you. Thank you. Thank you very much. So with the concept of confidentiality, you don't need to talk anyhow. You have to be able to keep your client's information secret, safe. Your client should be able to feel safe disclosing information to you. So, however, this is another area you should not miss because it would always be there in your exams question. There are exceptions. There are exceptions for confidentiality. Yes, you have the obligation to keep information secret, but there are exemptions. There are cases where that particular obligation, you don't have to keep hold to it. An example is when the law requires you to do so. When the law requires you to do so, in that case, you don't have any option, but you should disclose the information. What's the concept of confidentiality? Let me say that again. The principle states that professionals should not disclose information that they were privy to in the course of carrying out professional assignments. They shouldn't disclose those informations to others for personal purpose. We now went forward to say, yes, you should not disclose these informations. But there are exceptions. There are cases that even though you are bounded by a principle not to disclose, there are instances that you might have to disclose. And there are 4 instances. Number 1, requirement of the law. There is something called contempt of the law. So probably if the court gives you an order, we are aware that you are the auditors of ABC Nigerian Limited, and you now want you have to do this. If you fail to do that, it is contempt of the law, and you would even have to pay some get some charges and fines for not disclosing. So the principle already gives you that leverage, that where it has to do with the case of money laundering, the law court is asking you to provide that information, you need to disclose. Number two, where the client himself gives you permission, say, Oga, I want me you tell them, say, waiting do, you have no option but to disclose the information because the client has given you permission in that case. It's just like a doctor. We are professionals, lawyers, accountants, doctors. This concept of confidentiality goes around. I think in law, if we have someone that did law, confidentiality might be I think it's a course on its own or somewhat. One of my lawyer friends spoke extensively about this. So you don't disclose information, but where the client gives you permission, that's the second instance, the second exception. Say, go ahead. So, for instance, if someone we would have instances that a client will write officially to you, say, I have directed this person to come to you to get this information from you. Please go ahead and release the information. That is where the client gives permission. The third instance is where there is a litigation process. Where there is a litigation process. In this instance, you don't have any option but to release the information. This is related to so much related to the first way we say required by law, a case of money laundering. So litigation process as well, you have to release the information. And then where it is of public interest, the accountant or the auditor, when you have spotted that when you release this information, it will be in public interest, you have to release and disclose the information. Let me give you an example. I think in one of your exam questions, it is there where an auditor noticed that a client, if a pharmaceutical company is not using the right items in producing drugs, the right component, and NAFDAC have been complaining about that. They are always trying to they bribe explicitly. They provide funds to the this is not a real case, sorry please, this is just an analogy given out before this session is streamed on YouTube later on. Someone shouldn't come to hold me, this which is for education purpose. We are just using a an analogy to explain public interest instances. So please, I hope we are following me, right? Please use a thumbs up if you're following me. All right, thank you. So in the case of public interest, there's an African adage that says that anybody that goes to the stream and defecates inside the stream, if his brother does not fetch water in that stream, his sister will fetch water, or the brother to the uncle will fetch water, or water will be fetched by one way or the other, and it will be linked to him. So in this case, this is a typical example of public interest. So an auditor, you are auditing a firm, and then you've spotted the example I'm giving. You spotted in a pharmaceutical firm is not using the correct composition of to formulate a drugs and a drug, and then NAFDAC have repeatedly spotted these subsequent checks coming by from NAFDAC. They block it and then start to provide unnecessary favoritism, and there are bribery, there are cases of bribery. You have spotted that, you have seen clear evidence on that. You have to disclose that information, because if it doesn't affect you, like the African adage I've given, it will affect your brother, it will affect your sister, it will affect the sibling, it will affect one way or the other that is connected to you. So it is at the public interest for you to disclose that information so that something can be done. Same thing applies to the audit tax holistically, that even though we are bounded by the confidentiality principle, where we have spotted clearly that it is of public interest, we have to disclose the information. All right, to reiterate what we are saying, this is a very important point. You will see it in your exams. You will see it in past questions, and likelihood of it coming back is there. Concept of confidentiality. Write short note on it. Explain the concept of confidentiality. Concept of confidentiality simply implies that professional accountants, professionals holistically, not just accountants, shouldn't disclose. They are compelled by an oath. In fact, it is a mandatory requirement that professionals should not disclose those information that were privy to them as a result of their carrying out professional assignments for use by anyone for personal purpose. You should not disclose your client's trade secret to another client. You should keep all information secretive as they are marked confidential. Yes, you will not stop by explaining there. You have to go forward to explain that even though professionals are required to keep information confidential, there are exceptions. There are circumstances where you will have to disclose these informations. 4 circumstances. 1, case of money laundering. Client gives you permission. There are litigation processes, and then it is on the public interest for you to disclose the information. Then you disclose the information. Hope we can proceed. If we can proceed, use thumbs up, please, so that we proceed. Who is there? Deborah. All right. Thank you. Thank you. Thank you. Thank you. Thank you. All right. Thank you. Thank you very much. If you have any issue you want to chat, you can use the chat box. All right. Fine. Let's proceed. Other consideration in deciding whether you are to disclose the information. Chartered accountants should always check these points. Whether all parties, how many of us, do we have any Rotarian, anybody from Rotary Club on this call? We are 29 on the call. Do we have any person that is a Rotarian, a member of Rotary Club? If you are, just use thumbs up. Let me be sure I can use this particular. Okay, anybody? Okay, oh, we have a Rotarian. Good, good, good. I hope we know of the four-way test. The four-way test. If it is it fair? Is it all of it? Now, this is what we are. This also applies here. Whether the interest of all parties could be harmed before you disclose confidential information. Whether all relevant information is known and substantial. Before you go and say that it is at the public interest that this client is doing something bad, have you gotten all relevant information? It should be concrete. You should have established facts before you now go to start disclosing clients' information and say, oh, you did it because of public interest. Maybe like that you could do. All right. Then the type of information expected. All of these should be considered before you disclose confidential information. Improper use of information. Chartered accountants or members should not use confidential information in the course of their profession for third parties. So if you have insider dealings you've gotten to know in the course of doing your job, it should just stay with you and with you alone. The concept of confidentiality do not just apply to informations you get in the client's premises. It also also apply to your work papers, your working papers. We would get to learn about audit tools later on, where we speak extensively about working papers. So audit working papers are the utensils that are made used by the external auditor while cooking the audit report. I'm using bad words here. I shouldn't use cooking. Audit report I don't cook, I'm prepared. All right. So what you use to formulate your opinion are working papers. So working papers are like your tools, your gadgets that when you were in the client's premises, you took notes of this, you took notes of that, these are your evidence that you now gather them together to assist you to form the opinion. I would always love using the basic words so that you could always try to understand properly. That's why I brought the utensils and cooking in explaining working papers. All right. So working papers also have to be confidential. Working papers also have to be confidential. So you don't have to keep clients' working papers carelessly. That concept of confidentiality also applies to working papers. All right, conflict of interest. Conflict of interest exists where the accountant accepts an engagement where his own interest is against the tax that he's going to do. So we say that an accountant should not accept any engagement where his interest conflicts with that of the client. A good example is if you know that you don't drink. I'm just using this analogy. You shouldn't take up a client that is into alcohol business. We used to have instances of this where that is the basic example I'm citing. I'll give a more retentive example. Right. Relating to audit jobs, there are instances where a client might be a business partner with you, and then you are to formulate or prepare an audit report that will be used in the bank. So you know that you have an interest in the company, that is to protect the company, because you have a business relationship going on. And then you are also at the flip side to be objective with the bank. The bank wants to give this your client's loan. Prepare financial statements that are objective so that the bank can make the best decision whether this client is in a good financial standing or financial position for them to give them. You might have instances where this happens. Oftentimes, if the client of whom you have business relationship with is not having a good financial stand because of your conflicting interest, so that your business relationship can continue and so that the bank can release funds, and then your client's business can grow so big, and then you will eventually become big as well. You might compromise and then form opinion and audit reports that suit what your client wants so that they can get the bank loan. That's an example of interest conflicting. So your self-interest is conflicting with the professional way things should have been done. And an example is where a member of an engagement has a business which competes directly with the client. Another instance is if you yourself, you are the engagement partner on an assignment, and then you are into the same line of business as a side hustle. That is an example with what your client is doing. You'll be seeing your client as a competitor, and then you might be interested so much you might go to be using their own trade secrets to boom your own business. Things like that happen. So what are the safeguards? The following procedure must apply. You should identify the possible conflict of interest where the interest is conflicting. You should be able to identify it and then evaluate the possible problem and take actions to manage it. So if probably it's just one team member that of whom his interest is conflicting, we can take off that team member from the audit team that are going. So first thing is identify what is the possible cause of the interest conflicting, and then try to evaluate the problem and check out for ways out of that. The action course may be to notify the client. In some cases, you notify the client and tell the client that, oh, there is conflict of interest. I will not do the assignment. I will not take part here. And then another instance is where I'm sure I mentioned earlier, Chinese wall. So you can set up a Chinese wall to manage the problem. That is, use different teams. I have mentioned that the way if it is only one team member that has the interest conflicting, we can take him off and then create a Chinese wall so that he doesn't come in between with the team members that are actually doing the job. And then we can also say that you would have to consider declining or resigning from the engagement. So conflict of interest between two competing clients, where you have instances where, for instance, you might be auditors for Dangote Cement, and you can also have Boa Cement, Dangote Sugar or Boa Sugar, the rest of it. Those major competitors, you might have two of them being your clients. So how do you handle this particular case? We would also mention that you can create the Chinese wall. The team members that are going to audit Dangote shouldn't be the team members going to audit Boa. So you send different teams of staff. You separate offices where possible. You can also use different partners to head the team. Um, you can bring in a third partner to come in and then oversee the work that is done by different teams. And you should be able to tight the confidentiality that these team members that are on Boa shouldn't be able to come and disclose what they have seen in Boa to Dangote, so that we shouldn't be interest conflicting. So tell both clients of the conflict that exists, and tell them if they are okay with you continuing in the assignments. You should also explain to them the effort you've done to ensure that there are no disclosure. So in most cases, you can consider resigning from one of the clients, so that the problem no go come too big past you. You can just resign in one of the client's premises. All right. Are we still together? Do we still have members with us? Let me confirm we have all right. Thank you. Thank you, Miriam. Thank you. Thank you. All right. Good, Joseph. Father K, Ibrahim, Mustafa. Thank you very much. All right. So let's proceed, and then we'll end in chapter 3. We're almost at the end. That is ethical conflict resolution. How can we resolve ethical conflict in evaluating compliance with the 5 fundamental principles? We can remember, what did I say is the acronym for the 5 fundamental principles? I would love someone to use the chat box and then type that in. What did I say was the acronym for the 5 ethical principles? All right, Father K, Pico. And I'm sure we can still remember what each of them represents. All right, P for professional behavior, I for integrity. Oh, Yetunde, you should double the C. Just one C you brought in. So we have professional behavior for P, I for integrity. First C is confidentiality, second C, competence, and then O, objectivity. Professional behavior, may you behave well, you be accountant. You not going to talk anyhow. You got to dress well. You go work early. Integrity. You got to tell true all the time. You not could lie. Confidentiality. No disclose matter. Now that matter we just the talk now. No go disclose client matter. Go give outsider. The second C, competence. You got to be intelligent. You got to get something upstairs. And then O, objectivity. You don't have to be biased. You shouldn't be crooked. Your way has to be straight. All right. What are the instances where there are conflicts, and how can we resolve this conflict? So we say that an accountant may resolve a conflict considering the following relevant facts: ethical issues involved, what are the principal fundamental principle related to that matter, and then what are the established internal protocols or procedures, what alternative source of actions exist. So having considered these issues, our accountant should be able to determine the appropriate course of action that is consistent with the fundamental principle. So wherever you have instances that you have ethical conflict, you should always assess the relevant facts. What are the facts behind this? What are the issues involved? Does it have any issue related to objectivity, or does it have any issue related to independence? All the things that we are saying. and what can I do to help myself? If the matter still remains unresolved, the accountant should consult with the appropriate person in the firm. So we have instances. I think later on we'll talk about money laundering. We'll say where you as a junior audit staff, maybe you have suspected some money laundering clues in the office or in your client's premises. You have to report to the MLRO, that is the money laundering reporting officer. Those are instances, and from there you can take it up. So where you spot some ethical conflicts is to try take course of action by yourself, and then if the issues remains unresolved, you can now reach out to your senior in the firm, or probably you reach out to the audit committee on it. If it has exhausted, if the auditor exhausted all the relevant possibilities and then the issue still remains unresolved, you can either withdraw from the engagement. Now there is a term called no clay, that is non-compliance to laws and regulations. Very important. Let me pause and mention that most of the things that we have done today is in fact they are major points that are always examinable, always repeating. The concept of the professional ethical principles, where we mentioned the PICO, the threats. This chapter 2 is one of the chapters that you would always see your exams. You will always see in your exams. The ethical principle, the threats to the ethics, the concept of independence, the concept of confidentiality, and then now the no-clear, non-compliance to laws and regulations. Here, we say that IFAC have provided regulations where if you are an auditor in a firm and then you spot that your firm is not complying, no clear is not none, NO is for none, non-compliance with laws and regulations. What should the auditor do when he has spotted this? And what are the examples of non-compliance? Where you spotted, yes, remember we mentioned, I think, yes, I took that session that in the last class, I mentioned the primary purpose of audits is not to spot fraud, is not to detect error, but in the course of carrying out your audit work, you might spot some no clears, you might spot some non-compliance with laws and regulations, you might spot fraudulent acts, corruption, bribery, money laundering, terrorist funding, proceeds from crime, um, security market trading issues. You might spot data protection issues, environmental protection issues, public health and safety. That's where I spoke about public interest. Yes, tax and pension liability issues. All of these, you might spot clues that shows that there are non-compliance. We used to have instances where some companies are seriously in the business of evading taxes. So those are non-compliance issues. What does the framework of no clear simply implies? It shows the procedures that the auditor should follow when they suspect fraud or illegal act, and the circumstances in which the professional accountant can override the principle of confidentiality. Remember when we said something that, yes, there are 4 exceptions for you to be confidential, where you are, please, these things that I'm saying, very, very important. 4 exceptions. There is a money laundering case. You are permitted by the client to do that. There's an act of law or a court order, and then there is in public interest. So these are exceptions, and no clear is a particular exception as well to read. Okay, now it is common that once the auditor encounter any of this issue, he has to either, you don't just simply resign, but you have other tasks that you can do. The auditor's responsibility, you should obtain understanding of the matter. You have to understand the matter. You have to advise the management. So for instance, if you go to a client's premises and then you notice that they are not paying pensions, they are not paying, it's compulsory that any organization that have more than 7 staff should contribute do contributory pension scheme. But if you are going for an engagement and then you spotted that the clients where you are going to engage, where you are going to carry out audits in his or her in its premises, do not carry out pension or do not comply. Some of them are not doing the 10% against the other contributory pension scheme. Maybe they are now deducting the whole percentage from their client, from their employees without contributing their own. You have to advise management to take the appropriate and timely action. They should correct themselves. That is the auditor's responsibility. Yes, this is not your sole primary responsibility, but because IFAC have propounded a principle under nuclear, when there is non-compliance with laws and regulation, what should the auditor do? First, obtain a proper understanding about the matter, advise management, help them. Some management, some organizations, they are not aware of the laws and regulation. So you advise them, rectify and mitigate the consequence of non-compliance. You tell them this is the effect of you not complying. Disclose the matter to the appropriate authority. So you know of audit committee, you disclose the matter. I came to this audit, I came to carry out this audit work, and then in the course of carrying out this audit work, I noted that you people are doing this, you people are doing that, and I believe that you should do this, you should not do that. This is the consequence of you not complying with these laws. You should also make sure it is properly addressed and the right action is taken. That is why auditors used to have what is called the management letter, which would disclose areas of weaknesses to their clients and then how it can be corrected. All right, we are almost at the end of the class. Auditors' responsibility, we have stated that auditors may disclose the matters to an appropriate authority if the client is engaged in bribery. When there are bribery cases where there are cases of money laundering, tax evasion, or matters that relate to threaten the operating license, funding terrorism. In these cases, you are disclosing the matter straight to the relevant authorities, EFCC, the police, NAVDAC, relevant agencies. When you've spotted cases that are of bribery nature, matters that are significantly threatening the organization's operating license, they are harmful products that can affect public health if sold. We gave an instance of a NAVDAC case, and then tax evasion and money laundering. So that being said and done, we are almost at the end of the class so that we can go to bed. But before then, we just take a little recap of what we've done so far. We started the class, we're reviewing what we did, starting with the chapter 2, where we said this chapter is very important because of your. Please confirm you can hear me before I take this review. Everyone, please confirm you're still on the call, you're active. All right. Okay. Miriam, who is there? Confirm you are still active. Confirm you are still active as I'm about to do the recap. Okay, thank you, thank you, thank you, thank you, Hamid. Okay, I can spot all of you. Thank you, Joseph. All right. Sheun, okay, I'm about to do the recap now so that after the recap we can call it a wrap. All right, Samuel, Ibrahim, Mustafa, Ramon. Okay, thank you, thank you. Right. So we started with doing a review of the professional ethics and code of conduct, where we said that this chapter is very important. You would always see at least one exams question on this chapter. So you shouldn't play with it. You should do well to have it at your fingertips. ICANN code of conduct is related. Is in fact it is a reflection of IFAC code of conduct. ICANN is a member of IFAC. IFAC is International Federation of Accountants. So whatever IFAC does, ICANN being its member adopts it. And then they are always after public interest. What's the meaning of public interest? The entirety of the populace. What are we doing to ensure they are safe? What are we doing to ensure that they are their own interest is not trampled upon? What are we doing to ensure that the accountant in public practice is for the public interest? When we mean accountant in public practice, we are saying that the accountant that is an auditor, the accountant that is working for the populace as a whole. Anybody can walk into your office and then ask for your service. So you are working for the public interest. You are trying to ensure that their health and safety is safeguarded. Public funds and assets are effectively used and managed. There's no mismanagement of funds. Those are all public interest items. So there are examples there. There's no misleading of the public. That is what public interest simply implies. Okay, we move forward to say that the ethics in accounting can be rule-based or principle-based. What's the meaning of rule-based? Rule-based means it is a law. If you have to do this, those are laws. If you don't do it, that means you've broken the law. But most times, we have the principle-based approach, which is a bit flexible. A bit flexible in the sense that you can bring in your judgmental approach to it, and we've went forward to look at the five ethical principles: PICO, PICCO, professional behavior, integrity, and the rest of it. We are also moving fast because Mr. Gabriel did this. This is a recap in traits that can affect the professional ethics: self-interest, your own interest, your desire against what should be. You are now putting your own self first against the firm. So self-interest means yourself is first against the firm. Self-review implies I am going to check the work I have already done, which implies I might not spot my own mistakes. Very true. We don't spot our mistake. Advocacy, I'm going to speak on behalf of my client. Intimidation, my client is threatening me that he would either take me to court, he's going to kill me, come against my family members, things like that. Familiarity, I'm rubbing shoulders with my guys. They are my pals. So these are things that might affect me. There are safeguards, get learning. By safeguards can be put by profession, by workplace, and by individuals. By profession means we have to carry out MCPEs, continuous trainings. I mentioned last time that audit accountants, when you finish when you complete, when you are chartered, you have not finished. You have to continue training yourself. That is continuous education. That is the safeguard put in place by the profession. You have to learn and then keep yourself abreast with relevant laws. Safeguard put in place by the work environment. Audit firms set up in sound internal control systems. We spoke about Chinese wall and the rest of it. Then some safeguard be put by individual. Some people have mentors that they have to reach out to before they do anything. They reach out to their mentors. And then we also went forward to look at the concept of independence. This is where we spend so much time. Independence in the mind is the actual independence, because that one, nothing control something that is in your mind. I want to do this, I'll do it without any influence. Concept of independence means I'm not seeking people's opinion before I do things. I am doing it by myself and on my own. I'm not depending. That is the meaning of independence. So we have independence actually and perceived independence. And we said that the accountant, the auditor should both be independent in the mind and independent in appearance. That is, I should be seen to be independent and I should also be independent. Independence being seen to be is an appearance. I should actually be independent, that is in the mind. So people should not think I am not independent with my action. And I should not also make what they are thinking true by not being independent in the mind. So we have different traits. Pricing, we spent time to talk about the financial interest, that money is a major problem. It will always make people act anyhow, close businesses. And I spotted that these things would be embodied inside a storyline. So someone will come to tell you that there is a client that this and that is happening. These are all embodied in a storyline. When we are doing revision classes, we'll be hitting on past questions, and then would emphasize and then see how these things are or related. So we spotted different examples of threats here, and we said that hospital. We spent some time in speaking about audit fees. That you should not be an audit firm where one person pays you more than 15% of your total income. In that case, you are so much answerable to the person. It's just like ourselves here. We have yes, some of us we have side hustles we are doing. But if our salary pays us up to 80% of our side hustle, we give so much preference to that side, to the job that gives us the money. Same thing happens with audit firm. If one single client can pay you up to 80% of your money, now the baba be that one now. Odogu for everything. The bada. So you will be giving preference to that particular client compared to others. Now we say that gift as well and hospitality, before you accept so much of it, you should ask if it is material. Is it given to me, or all these treatments, is it during normal working hours? And then you have to disclose it in most cases to your senior partner. Right, we've moved forward as well to explain so many things related to staff on secondment, it post self-review trade and familiarity trade. What auditors have to do to help themselves in the case of second review, second opinion, and then specialist valuation should not be done. We went forward to speak about confidentiality so much. Let me say that again. Confidentiality, I should not disclose information that we made privy to me in the course of my carrying out the job. However, there are four exceptions for the principle of confidentiality. When it is required by law, when the client gives me permission, when it is a public interest, and then when there are litigation cases. Right. We went forward as well to look at confidentiality is not all about information. Your own working papers. You went to the client premises, the client gave you a bank statement, and then you sat down and extracted bank statement into your working papers. You went home with that working papers, and then you are going to keep the working papers anyhow. No, you have to also know that your working papers have confidential information about your client, and you should also keep it confidential, not disclosing it. We have conflict of interest, where interest might conflict. We have instances where team members' interest might conflict with the auditors, and then we can with the client, and we can also have instances where we have two clients whose self-interest are whose interests are conflicting. They might be competitors. So what should we do? Create Chinese war, send different teams of staff, this and that, different managers, different heads, tell the client that this one you want me to become your auditor. I'm also auditing this other person who is your competitor. Are you okay with it? No, I'm not okay with it. Or yes, I'm okay with it. If the matter comes there, like say you go tie a tie, you just resign from the audit engagement. Then we also say say something about ethical conflict resolution. Some instances we might have a situation where a client is on, where a firm is on an ethical dilemma. They are trying to decide whether to take up the engagement or not to take up the engagement. Always be able to identify the facts of the case and then do some reviews, as we stated earlier. Then to end the class, we spend so much time on no clear, that is non-compliance with laws and regulations. So we said that non-compliance with laws and regulations, when we go to the audit firm and then we spot that our client is not complying with relevant laws and regulations, such as public safety, pensions, environmental implications. We have sustainable practices, carbon footprints that are burning their diesel 247, and fraud, money laundering, bribery, that are funding terrorism. The government is looking for them. When you spot most of these things, what do you do? Data protection, they are getting information about their clients or their employees, and then they are not obeying the Data Protection Act. That they are disclosing those. These are non-compliance with relevant laws. You know there is a Data Protection Act, but you spotted that your client is not complying with that act. You know there's a tax law, the tax reform bills are there put in place. You've spotted that they are not adhering to it. Pension Act is there, they are not adhering to it. What do you do? understand the matter, advise them, try to rectify them, tell them the consequence of non-compliance, disclose the matter to the relevant authority. However, if this matter big belle, it can't dey involving funding terrorism, bribe, harmful products to the public, issues that affect the public interest, money laundering, just go straight to the relevant authority. So that being said and done, I would love to take questions. Thank you very much for your attention through the class. I would love to be sure. Okay, thank you, thank you very much. Um, let's get questions. Thank you, Joseph. We are seeing the clap emoji. The bio. The chat box is open. Okay, Father K, you have questions. I would love to get questions from you. If you have questions, kindly um raise your hands. I will spot you, and then we take the questions. Father K, go ahead on mute and speak.
Good evening, sir.
Yes, good evening to you.
Thank you. Thank you for the lecture. My own question is because I was confused. Is there any difference between fundamental principle and professional ethics? That's my question. Thank you.
All right, thank you very much. They are synonyms. So we say fundamental principles, ethical principles, IFAC principles. You will see them as five ethical principles. Exams question will tell you mention and explain the five ethical principles as propounded by IFAC. They're all referring to PICCO, professional behavior, integrity, competence, confidentiality, objectivity. Thank you. I hope that clears your question.
Yes, sir. What about the fundamental principles, sir?
I just said that fundamental principles is the
Mm,
same thing as ethical principles.
ethical principle. Thank you. Thank you. I got it now. Thank you.
All right, Adebayo. Adebayo. That's the name over here.
I just put it down. I understand. Thank you.
Okay, you were about to ask the same question.
Almost the same question. So
Okay,
you clarify it already.
all right.
Almost. Thank you.
You're welcome. Adebuyi Sheun, kindly unmute and speak. Sheun, your hands is up. Kindly unmute and speak.
Okay, again, good evening.
Good
Good evening,
evening.
sir.
Thank you.
Okay, I want to ask a question. I think from ethical, what I'm saying. Okay, let's assume as an child accountant, as an external auditor, fine. Okay, and maybe the complaint auditing, as in is into indirectly shortchanging suppliers. So suppliers.
Mm.
As a what can I do? As in just what steps you as an auditor to as an advice I can give the organization? Because there are many scenarios. If you go to some companies, they know how to change their suppliers because of their benefits.
All right. Thank you very much. Thank you, Mr. Sheun. So you are a good, if I have gotten you right, you are an auditor. Your client, you spotted that your client shortchanges her suppliers. Probably they are paying their suppliers less than they should pay. That is right.
Yes, sir. Yes, sir.
Good.
Yes, sir.
So it's just the same treatment as IFAC gave for the no clay non-compliance with
Non-compliance. So
laws and regulations. So probably we would perceive here that your client and their suppliers must have had job orders and contractual terms. So if we say that there is a non-compliance with the contractual terms, the principles and the 5 steps still remains. First, have a broad understanding of the matter. Like I mentioned that the accountants do not just rush. One notable characteristics of an accountant is diligence. If we are to speak extensively on the concept of competence, we would always say, and professional behavior we say some textbook will call it professional diligence as well. It ties diligence to competence, and we say that the accountant has to be very, very careful. You shouldn't be carefree. So before you accept, before you take side to say yes or not taking side, let me not use taking side, before you uh, confirm and also say that they are shortchanging the supplier, you should have been able to get sufficient understanding of the matter, get the terms of supplies, get to know what they were supposed to pay and what they paid. Second is advise the management about what they are supposed to do, a timely action. Tell them the consequence of what they are doing. So if you've gotten enough information that yes, so these people are shortchanging their supplier, the next thing is tell them what is appropriate to do. You are supposed to do this instead of doing what you are doing. The next now is the consequence of you doing what you are doing. You shortchanging your supplier can bring about litigation on your company, and you run into legal cases. Legal case in Nigeria is a very wonderful one. Can run for 1 year, 2 years. The matter is still the court. So you try to explain to them the effect of what they are doing. Tell relevant authorities. If you are talking to the executive management and then they are not doing anything about it, you speak to the audit team, audit committee at the non-executive management, and then something will definitely be done. If they are still not doing it, you have the right to say, if it is significantly material, if it has fundamental issues, if it affects your financials, it can affect the fact that you would say that the financial statement is true or fair when it is not true or fair. You can consider qualifying the audit report, or you give a disclaimer, and then you resign from the engagement. I hope that's fine.
Okay, thank you, sir. Also, sir, as in from prior to one the lecture, I can remember out of the threats. I think one of the threats you teach. Okay, let's assume okay, there happen to be a scenario. We went to go and audit. Recently, it just happened. It's just a recent. Okay, we discover why the staff, the staff are changing the organization because number one, they never paid immediately when the month ends. At least, okay, let's assume today is 30 or 31st, any of the month. They will pay in the next month at the middle of the month. And also in such case, at times the staffs are not giving the full disclosure. Okay, what advice can I give? Because it's not a PLC or group, but it's owned by one person, one sole proprietorship, not two, one. Okay, and the and what and the owner of business is so adamant. In what situation, what can someone do? Because on getting there with I myself, I discover one or two reasons why the staff are so changing the company. So in such a what's an auditor? What can someone do?
You are an external auditor. I would always say you should be skeptical. The way you are sounding, it's as if you are taking sides with the staff already.
No. What happened is that I didn't take sides. Because even though when the person that took the job also have once worked as an accountant in that company before. before he became a charter, become a fellow. It was like maybe like 10 years back ago. What is happening 10 years back ago is still repeating itself. So you get me? What is happening 10 years ago is happening as at now.
Okay, anyways, this is what I would say. When you go to client premises, you should be skeptical. I'll still hit on what I earlier mentioned. Make sure you get sufficient understanding of the matter. Like you're skeptical, you're not believing anybody. You hear from the staff, you hear from the owner of the business, and then you try to tell him these are the things that you're doing that aren't right. This is the consequence. This is what it is right overriding on you, and then you give your advice. I have mentioned that even in some cases where your advice is not adhered to, you can leave the engagement. However, let me mention this out the way. Sole proprietorships have a general problem, which is the excessive influence of the proprietor. Sole proprietorship everywhere have a general problem, which is the excessive influence of the proprietor on the business. So in some cases, the proprietor would always take the steerings of the business and then might be driving reverse throughout when you are supposed to be moving forward. Even when you start giving the proprietor instances that Oga will they go back or we supposed to go front, the man will be doing what is inside his head because he's in charge, and that is the impact of excessive influence of the proprietor on the business. So it's a general problem associated with sole proprietorship. So when you give your own plight and then it is not adhered to, not be your business. So you just have to. That's what we said. If the non-compliance, no clear continually goes on, and then it is fundamental, it is significantly material, then you have to leave the job, leave the engagement. All right.
Yeah, right. What
All
happened is
right.
that later, the company, the audit firm I audited for leave the job.
That's
They
fine.
later leave the job.
Yeah.
Yeah,
Thank
but they
you.
now. Okay, thank you, sir. You're welcome.
No, you still no. You're free. You still want to say something? Go
Yeah,
ahead.
yeah. Because what happened is that later on, they now send a let the owner of the business now send a letter to the firm that if they can, give us, we are further went all this, if they can release two of us to them as an internal auditor because due to our performance. But the job, God mercy, it's like you work 18 hours out of 24 hours.
Uh-huh. All right,
That
that's
is
fine. That's what I keep on saying is a major issue associated with standard auditor, sole proprietorship. All right, thank you very much, Mr. Sheon, for the engagement. It's been very productive. Do we have any other question? Otherwise, let's get one review about the class, just one or two reviews about the class, and then how was the class? How can we perform better next week Friday? Just one review, and then we call it a wrap. Anyone, any volunteer, you take a review. Just unmute and say something.
okay. Currently, our advice, maybe at the end of the day, there should be, maybe is advice for general class. At least we should try. We should try to, each of us should contribute. Is maybe in out of the questions you can throw, each of us should try to, just a question, so just to unlearn, learn, and to relearn. So is, let's say we are group, so we should work as a team in aiming to pass the exam. So that's my own thought, or my own, how I will, in how I'll put it, made my own explanation. Thank you.
All right, thank you very much, Mr. Sean. So, okay, I would love to have one or two more, and then we call it a wrap. We've not had more people talking in the class. I hope some people have not slept. Some people have not slept already. Okay, who is there? Father K. Okay, you want to say something? Go ahead.
Sir, good evening, sir.
Yes,
Well
go
done,
ahead.
sir. My own contribution will be this. Sir, during the class, let it be more interactive because when the lecture was going on, in my own part, it was boring to me when you are explaining the independence. So when you are explaining, maybe you should throw a question to us so that we know that we are following you, sir. That's what I want to say.
All right, thank you. Thank you. Any other person? Okay, Joseph.
Good evening, sir.
Good evening, Mr. Joseph. Go
Uh,
ahead.
the class was beautiful and very engaging. But my observation is maybe going forward, maybe we'll have like a question or two from the exam. We'll be
Okay.
giving assignment on topics maybe based on past question, like this chapter 2. If there's any question that I can ever ask, so that they will give us like something like a revision, or maybe we can ponder on it, or we can be given as assignment. So to make us more prepared toward the exam by May.
Brilliant,
That's my
brilliant,
observation, sir. Okay,
brilliant.
thank you, sir.
Thank you. Thank you very much. Um,
Okay.
I give it to all of you, and I'm very glad for the participation. We've had Rosemary on the chat box. Well done. Thank you very much. And then other persons, beautiful lectures, well delivered. All right. Thank you very much for all your. Okay, Hamed, I can cite you. There are some people that love using the emoji. They will just they don't like talking, and I understand. Thank you very much. Thank you very much. I'm sure you got value for your time today. And at this point, except we have any other person that wants to, Yetunde, well done, sir. More strength. Okay. Is there any other person that will want to say anything? How was the class? It was good. How can we become better? I've noted all the points that you people have said. Um, just 5 seconds to check if we have any other person that wants to say something. If not, we call it a wrap. Okay, I'm just checking if there is. So, thank you very much for your time, and we have taken note of all your reviews, and we'll look at how we can become better. Thank you very much. It's a wrap. Good night, everyone.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you so much. Thank you.